Hey, this is Chris with Suarez Home and Finance. Good morning. It is our Monday morning coffee with Chris. So this morning we're going to be talking about the mortgage process. So what actually happens with the process and all of the steps in between. So sometimes you feel like you're going crazy. Oh my God, why do I have to send that in again? I already did this. Why do you need all that information? All that kind of good stuff. So we're going to go through the steps during the process, how it works, and hopefully put your mind at ease as far as things, that you don't know, or, oh my God, I just don't know what's going on. So that's what we're going to be doing now. That's what we're going to be doing through this process, through our class this morning. So hopefully this will give you a lot of information. If you know somebody looking to buy a home or to refinance, please make sure and share this. Give us a like, give us a comment. You love us, all that kind of good stuff. So hopefully, again, you're going to get lots of information like on all of our past classes and all of our future. And again, I'm going to just put this out there again. If you are the expert in your field, let's say, for instance, I've got a guy, a friend of ours, named Mo. I'm trying to swallow. I've got a friend of ours named Mo, and he is at Famous Tate. So Mo, if you're listening, and Mo wants to be on here with me and talk about what the do's and don'ts of what you should be doing. So like right now, our washing machine is out. So Andy's looking at replacing the motor. So what's the do's and don'ts maybe on stuff like that at Famous Tate? Just throwing that out there, Rhonda. So anyways, so we're going to get started on the mortgage process. And again, if you are the expert or if you know something or whatever and would like to share, educate people, come on, let's do it. So let's get going. So this morning, again, we're going to talk about the mortgage process. So this is the mortgage process. So what in the world has to happen in order to close on my home? So this is, these steps are for whether you are buying a home or refinancing, doesn't matter. So the steps are pretty much the same, and that's what we're going to go through. So the step number one is to get pre-approved. So even if you're looking to refinance, you still need to be pre-approved. We still need to make sure that the numbers work. You need to have your income and credit. So those are the first steps of being pre-approved. There is a difference between being pre-approved and being pre-qualified. And we've talked about that on past classes. We at Suarez Home and Finance do not do a pre-qualification letter. We go more in depth. And so if you are using somebody else for your financing, make sure that they are going in depth. You need to have your income reviewed. You need to have your credit reviewed, and your debt ratio. Your debt ratio is your gross income versus your debt. So your debt is the new mortgage payment plus any debt that's on your credit report. If you own another home, if you have a car payment, your minimum monthly payments on your credit report or on your credit cards. If you have any student loans, which that's going on in the world today, but as of right now, we still need to count a payment against you. In some cases, there's some cases that calculation it's different per loan type. So it's, looking at what direction we're going. So that is your debt ratio. So again, if you're looking to buy or refinance, you do need to get pre-approved. I would strongly recommend getting pre-approved versus pre-qualified. Pre-qualified, from what I have seen, and again, I repeat this all the time, I'm speaking from what I'm told and what I see. A pre-qualification letter, from what I've seen, is basically you going on to a online website for a major like a major bank or whatever or something, and you're putting in your information. Credit is not pulled, but they're going based on what you key in, and giving you a pre-qualification based on that. So let's say, for instance, you're self-employed, and you think or you say that you have, gosh, I'm so sorry, that you have gross income. Your gross income is you're like $200,000 a year. So your gross income is $200,000 a year, but that's not your net. And we've talked about past classes on getting pre-approved. So that's where that comes into play also. And so that is key. And so if you're typing in something and you say, I make $200,000 a year, you're pre-qualified, you're putting an offer in on a house and you're moving forward, but you're really not pre-qualified because your bottom line is only maybe 50,000. So it's so important to get pre-approved, not just pre-qualified. Okay. So make sure that you're getting the correct thing from your finance person. Next is send in remaining documents. So your credit is already pulled, your income, which is your pay stubs, your tax returns, your W-2s, your fixed income letter, like Social Security, VA benefits, all that's already done. So now you've got remaining documents. That's your driver's license, your Social Security card. Your Social Security card is always best to send in because that is your legal name. Your legal name, you may be a senior. You call yourself a senior because you've named a child the same name as yours. But if you've not changed it with Social Security and your Social Security card does not say senior, then you're not a senior as far as the world is concerned, as far as government in your legal name. So if you are a senior, then you may want to think about putting that on, updating your Social Security number or your Social Security card with the administration. If you are married and you've not changed your name, we have to go by what your legal name is on your Social Security card. If you're a junior, you may say that you're a junior, but again, if it's not on your Social Security card, you're not a junior for the loan. So there's different things that, that's the Social Security card is the best way to make sure that we name the documents correctly, put it underneath your correct name. You don't want to have something happen and then we have to redo everything all over again because we didn't go by your correct name. So that's one quick way. That's the best way. So the rest of your remaining documents may be, or would consist of, so we said IDs, last 2 months of bank statements. So all of your asset accounts, we need to see, okay, do you have the money in there? Did you have any NSFs? So on and so forth. Is your bank statements with your name on it? Is there somebody else that's on there? All of those different things. There is, if you have any other properties, we normally would have already gotten your insurance and taxes from that other property and your mortgage statement. But if there's anything else, that needs to be done, child support papers, divorce papers encumbers child support and alimony. It also encumbers a marital settlement agreement. So that's where you would send that in. Anything that's pertaining to whatever your scenario is. So the main thing is the remaining trailing documents after pre-approval. Again, IDs, bank statements, trailing things, letter of explanation, whatever those kind of things are. So that's your next thing. So that is your remaining documents. It's better to have those up front while you're looking for a house. And in a case of a refinance, that you would be getting them now because we have to have that in order to start the loan. So these are all documents that have to be received in order to start your loan. Okay. And again, if you're buying a home, it's better to have these up front and done so that whenever you find a home, you can move very quickly. And so that's not delaying you because you are under contract and you're on a time frame. So that allows you to be able to move that much faster. Okay. And next, so you found a home. Oh my gosh, yay. So you found a home, or if we're refinancing, we're getting started. So you've been pre-approved, all your remaining documents are in there. Now the next step is finding a home or refinancing, getting started. So now that you've already been pre-approved and your documents are in, now you can enjoy the process of finding a home. You don't have to worry about, am I still pre-approved? Is it going to fall apart? You don't have to worry about all those things because it's already done. That's why we do those things up front. So you are enjoying looking for a home. Again, we're refinancing, we're getting everything into place, so on and so forth. So you found a home. Oh my gosh, so exciting. Now let's get you going. So At this point, we are going to, this is where that if you need to update anything as far as maybe it's been 30 days since you started looking, or at least a couple of weeks, and we need to get updated documents. Okay, so we need to get an updated pay stub, or we need to get an updated bank statement. So that's where this part comes in. So you found a house. Hey, okay, great, awesome. Let's get you going on the loan and getting everything in order. So, hey, I see that we need your pay stub that you received last Friday. Get that into us as soon as possible, please. So that's where you're going to do that. And I see my Nellie said, hi, Grandma. So hi, Nellie, Jeremy. So you're going to do that part. So whether you're buying or refinancing, get everything else to us that we need, so on and so forth. So again, we can move as quick as possible. Then the next step is let's get loan is started. So we've got all of those documents. So what happens is that my office, whoever's doing your financing, puts all of those pieces of the puzzle together. All of those pieces have to be put into place and in line, crossed, dotted, everything of the above. Make sure that everything is on board. There's no questions. You still have the same amount of money that you need to buy a home, and you're all set. So this is there's several steps in this in getting you ready. And if you're being asked for an updated document, then please get it to whoever's doing your financing. Would love for it to be me. But get it to whoever's doing your financing so that nothing is delayed. You don't want to be the delay of your own closing. Okay. So we can't guarantee, no one can guarantee a closing until you're signing on the dotted line at closing, but we cannot guarantee a closing date either if you're the one that we are still waiting on documents for. So don't be the cause of your own demise. Get all of those documents in as soon as possible. Okay, very, very, very important. So your next step. So now that you're under contract, and again, if you're refinancing, then if you need any inspections. So inspections include a home inspection. If you're going to do one in all loan types, a home inspection is your choice. It's not required for a loan, any type of loan. That is for a home inspection. Your insurance may require a 4-point inspection or a wind mitigation. That is something separate. So a 4-point inspection is normally if your home is over 30 years old or not lived in for about 6 months. That's normally the case. I'm not an insurance agent. That's where your agent comes into place. A wind mitigation, that gives you credit on your insurance. And so that is how many nails and hurricane straps are in your roof. In Florida, it's hurricane straps. I don't know what it's called in, say, California, the different things or whatever, but that's what it is in Florida. So that gives you a credit on your insurance, which is very important also. I've seen it save anywhere from $200 to $1,000 a year in your premium. So if you qualify, which your inspector should be able to tell you, and also your insurance agent can tell you as well. So that is part of your inspections. Also is your appraisal. So if the loan is started, we're getting all of that stuff done in the background. Your inspections are being done. And so now that the loan has started, we're sending you loan documents. That's where you receive your initial loan documents. These are estimates of dates and closing dollars. Okay. So nothing is firm at that point because you're doing inspections for insurance if needed to, which affects your premium. That also affects your closing cost. So if you're buying a home, we need to collect for 1 year of homeowner's insurance at closing. So what that means is that if I'm estimating $125 a month, but your insurance policy comes in at $200 a month, that's $75 extra a month times 12 months for your premium. That's going to increase your closing cost. And then that's also going to increase the amount that we collect for your escrow account if you have one. And probably 98% of loans have an escrow account, meaning collecting for taxes and insurance to be paid the following year, so on and so forth, so that you make one payment to your mortgage and then the rest is included in there. So that is the part of the closing costs. So whenever I say closing costs, whenever I'm talking to you, I'm saying everything turnkey out the door. So that's what you want to know. So if you're talking to somebody for financing and they're doing your loan, you want to know what your total payment is going to be estimated at this point, including taxes and insurance and mortgage insurance. And you also want to know what your total closing cost, including everything, is. Not just if I have any points or if I have this. You want to know everything. You don't want to be blindsided at the end. So make sure you are aware of those numbers and what they mean. We are going to do another podcast or vodcast on a loan estimate and a closing disclosure. So we are going to do that in the future, probably sooner than later. And that will explain that a little bit more. So keep watching Coffee with Chris. So your inspections. So we've started your loan documents and got those out to you, and that's your estimates. You're doing your inspections. During that time, so after we've started the loan, you are signing everything pretty much electronically. So you'll get an email from us saying, here's documents to sign electronically. Then because I'm a broker, you get a second email from my underwriters to sign the documents also. Unfortunately, those numbers are not always the same as my numbers because they don't update. My underwriters do not update real time like I do. So they will be a little bit different. It is a constant conversation all the time. But if you're trusting your finance person, which in this case, if I'm doing your loan, you have to trust me that we will not close if those numbers are not what I'm estimating and what I'm telling you where I'm at. And so during the process, my office is updating numbers during the whole entire time. Whereas my underwriters, we have to get in line for underwriting. We have to wait our term. It's like a ticket at a meat market. We stand here, we pull our ticket, we have to wait for our turn to be called. So in that time, there may be 50 people in front of us. I've already updated insurance. I've already updated a lot of stuff. So again, my numbers, which your finance person, should be the most updated numbers. If you're getting it from my underwriters, those numbers are not always updated. Again, that is a constant conversation that we have with clients every day. I just ask my clients, make sure and trust me that I got you, this is where we'll be. So again, that's estimates and everything else. At this time also, so once you've signed those loan documents, in this inspection time that you have is where we're getting the appraisal ordered. So the appraisal is telling the value. Yes, you can look at Zillow. Yes, you can look at the property appraiser's office, everything else, but that's not the value that we use. Those I have seen way up and way down. So again, we have to have an appraisal. An appraisal anymore used to be about $450. They're probably about $550 and up. Since there's been a change in the market. So this vodcast, we're doing this today is August 29th of 2022. So the market is just now kind of changing. A couple of months ago, and for probably at least 6 months or more, there was crazy amounts for charges for appraisals. We've had them up to $1,000. We've heard of them higher than that. I think that's kind of gone away at the moment. I've not seen anything like that because we're not asking for rushes. We're not doing any of that because the market has kind of settled down a little bit. So it's not as crazy. It's not crashed by all means, but it's not crazy like it was. So this is where your appraisal is part of your inspections. On your contract, this is also where that you are dealing with your real estate agent, and because you have an inspection period, you have a contract. So make sure that you are doing things when you need to. Again, that's why it's so important to get us those documents. So that is kind of we've done a lot during this time, which this part is key. So the next step is we get into underwriting. So you've signed your documents, you've gotten me everything. So we're getting into underwriting. While we're doing that, you're doing your inspections. Okay. Then all of a sudden, yay, congratulations, your loan is approved. That means you got us everything that you needed. Everything was dotted and crossed. Your income is there. Your debt is fine. Your debt ratio is fine. All of the above is great. Congratulations. Let's keep moving. So after your loan is approved, again, whether you're refinancing or buying, your next steps are your conditions, which is also called a to-do list, basically, is what, in layman's terms. So your to-do list may be, hey, I need a letter of explanation for this on your bank statement, or hey, I need a letter of explanation as far as you're living rent free. I need an updated pay stub. But included in all of that is the title work, which is what we're doing in the background, the homeowner's insurance. So you needed to pick an insurance policy by now. The appraisal needs to come in. Do we need a survey? Which we do need a survey. That's an ongoing thing back and forth. You do need to have a survey because we cannot have an exception on the title. So if title does not have a survey, they will put an exception on the title commitment, which is them ensuring that the property is free and clear. We've done past classes on title, and we've talked about this on those classes also, is those vodcasts, is that title will have an exception if they do not have a survey. And we cannot, on a loan, cannot have an exception. So therefore, a survey is required. Sometimes we can use a past survey if you are refinancing, if you've not changed anything on the property. Sometimes we can use a seller survey if there's, again, been no changes on the property, so on and so forth. So that's kind of that's what conditions are called, and that's kind of your to-do list. So again, time is of the essence. So if you're being requested, 5 things, then make sure you get those 5 things timely in order to not be your own demise. So next is I've received your conditions. Your finance person has received that. You're getting your conditions. We get back into underwriting. So again, we're pulling that ticket at the meat counter and we're getting back in line. We have no control over the time frame, but the better that we do our job in getting everything from you, once we do have our number called, the quicker things will be. Sometimes we'll have a clear to close at that point. Sometimes, because of the information that you gave me on your to-do list, maybe struck another question or something else that's required. And so that's where that we may have to send something back into the underwriter. So we've got the conditions. We're back into underwriting. Again, we've got our meat ticket number. So now your conditions are reviewed. And do we have any issues? In other words, just like what I had said, if an underwriter sees, okay, here's your letter of explanation. Yeah, that's not good enough. Why did you have these lates, back then? Well, you gave me an explanation, but it just wasn't clear. Because in other words, if you had some lates 3 years ago, what are you doing to not have those lates continuously? What have you done to change your life, to change your mindset and your finances in order to not have another late payment? So sometimes your answer may be too vague. I try to cut that off at the pass. Sometimes, a lot of times it's accepted. Sometimes we'll have to revise or go into it a little bit deeper. So that's just an example. And so we've got our conditions reviewed. In some cases, we're clear to close. So conditions are clear to close. We are getting ready to close. So we all did great. You did great getting everything. All of it is crossed and dotted, and we are good to keep on moving. So the next step is the clock is started. So what happens is that once we're clear to close, or even before we're clear to close and at a certain time frame, an initial closing disclosure, that's what it's called, initial closing disclosure, goes out to start our clock. We'll go through that on another vodcast, but that is where, again, it's not your final numbers, but it's as close as possible before we get ready to close. So that has to go out, and by law, you cannot close until 3 days after that. So if it goes out today, Monday, you have to count Monday, Tuesday, Wednesday. You cannot close until Thursday. That is law. There's no option. There's no waiver. There's no nothing. And so that's where used to, in the beginning, everybody had a problem with it. We all know that it's there. There's no more stress about it. It is what it is. So, but again, we normally don't have any issues, so we're good. So we have our clock is started. Do not set up closing yet, though. There's too many things still that have to be done. So we are preparing for closing. That means that your closing documents are being prepared. Quality review is being done to make sure that still everything is dotted and crossed. It's one last look at everything to make sure that we are good, to make sure that we can get you closed. This is also where that once the closing documents go out, they go to the title company and to my office, in this case, if I'm doing your loan, whoever's doing your financing. And then what happens is that between the three of us, my underwriter's closing department, my processor and the title company's closing person is all reviewing all of the numbers to all three coordinate to make sure that all the numbers are right. Again, that's where if I'm doing your loan, we are going through and making sure that everything is where I expected it to be. And if it's not, if there's some kind of change, which a lot of times the things that come up is HOI numbers or HOA numbers that we didn't know about. That's the majority of the changes that we have seen that are a blind side at the end. So that's where we've changed our process a little bit better to look at those numbers up front and make sure that we have them. So that's where we're all going through to make sure, everything is balanced, everything is where it needs to be, and so on and so forth. So we're preparing for closing. So once the closing documents go to the title company and we've got everything, all the numbers done, that's where we set up an exact time. And so let me go back a step, is that once we know the closing documents are going to title, that's where between my office and the title company get together first. Okay, when do you have open, so on and so forth. Can you do this date? So on, all of that. What's your schedule like? And then we're calling you as the client and saying, okay, can you do such and such? And here's a couple times to pick from. We know that you're working. And that's why we've, tried to get a couple of different times to set your schedule, because we don't want you to miss any more work than what you need to in order to get closed. But on the same token, you are buying a house, so you're going to have to be a little bit flexible as well. We'll do between us and the title company, we'll do the best that we can to fit your schedule, but you may have to bend a little bit also. So just kind of be prepared. Don't take time off work though. If you have to give like a week notice or something, then make sure and let your finance person know so that we can prepare for that also. And we, have a note on our file and everything else. And so does title, so that we don't say, okay, can you close tomorrow? Because that's normally not going to happen, but we don't want that to happen. So that is how that works as far as setting it up. But it's always a mess if you set up closing with a date and time before it is time, because then everybody is pressured, we are pressured, and we have too many pieces to be done of the puzzle before that closing happens. So please don't set that up. And then once the numbers are finalized and my office has approved it, and we've, my office and title and my closing department is already all set, and the numbers, we all three balance, then we give you the dollar amount to send all your money. And so what you have to do is you have to wire this money. So in most cases, you have to go to the bank and wire the money directly from the bank in person. That's not always the case. So that's where you're going to be making sure previous to now how you need to wire that money. And so that's where you wire the money. And so it's there at closing so that you can fund and get keys. Or a refinance, normally you don't need money. So congratulations, you own a home and you're saving, or you're saving money. So if you own a home, you may be saving money from renting that you always have been doing. Or if you're refinancing, hopefully you're saving money on that monthly payment, or you've paid off a crap load of stuff to where, again, you're saving bills on your monthly bill, your monthly bills. So again, we had you the whole way. And so here's your next steps. So give reviews. Oh my gosh. We go by reviews. We get clients by reviews. If somebody Googles, hey, who's the mortgage lender near me, mortgage broker near me, give reviews to the people that helped you. So that means your finance person. That means your real estate agent. That means the title company. That means the homeowner's insurance, the surveyor. We love reviews. We live on reviews. So please share the love. Try to give reviews. Don't try, but do. If you have Gmail, then you can give a review on Google. And if you don't, then there's always Facebook, there's LinkedIn, there's Zillow, there's Realtor.com for those agents. There's all kinds of avenues. So, and if not, like I have in my system to where that you can actually answer questions and then I can post the review from there. So please give us all reviews. We thrive on those. We live on those. That is key for us. That tells how we're doing. So there's all different options. Like I said, you can YouTube, like on this video, if you're watching these Coffee with Chris's, give us a thumbs up, share us, comment, all of the above. We live on those. We thrive on those. That's how people get to know more about us. And so hopefully you loved your finance person and your agents and all that kind of stuff. And so you want to share the love. So again, if you're watching this Coffee with Chris and you got a lot of information, please share, comment, love us, like us, do all of the above. Please, please, please. So that is basically, whoops, that's the end. So that is the mortgage process, all in 30 something minutes. So I hope you learned a lot. Please, again, go back and review this if you need to, share it, whatever. If you're a real estate agent, share it with your clients so that they are a little bit more educated during the process. So we hope to hear from you, and look forward to seeing you next Monday at 10 o'clock. I hope you have a great rest of the day and the week and learn lots, do lots, and be great. Talk to you later. Bye.